So I have this other article pulled up from Goldman Sachs, and it's from CBS News. Goldman Sachs expects unemployment rate to drop to lowest level since Korean War. So it's about an analytic prediction by Goldman Sachs. The U.S. unemployment rate will drop to 3.25% by the end of 2020, Goldman Sachs predicts. The last time the jobless rate was that low was in October 1953. Economists at the investment bank say the odds of a recession next year are dwindling. Goldman Sachs predicts U.S. unemployment next year will drop to the lowest level since shortly after the Korean War, or more than 60 years, easing recent concerns that the economy is heading toward a recession. Jan Hadzus, the investment bank's top U.S. economist, forecast that the nation's unemployment rate, now 3.6%, well actually it's 3.5% now, will sink to 3.25% by the end of 2020. The last time the headline jobless number was that low was October 1953, the same year Earl Warren was appointed Chief Justice of the U.S. Supreme Court, and Penny Page's "How Much Is That Doggy in the Window" reigned near the top of the pop charts. How Much Is This Doggy in the Window is a song I heard a lot growing up as a kid. Anyway, according to the Bureau of Labor Statistics, the lowest unemployment rate on record was 2.5%, which was reached in May 1953. 2 months later, North Korea and South Korea reached a ceasefire. The U.S. government began collecting unemployment data in 1942. Goldman's prediction that the unemployment rate will continue to sink highlights how much the outlook for the economy has changed in just a few months. At this time last year, an economic prediction model maintained by Bloomberg News put the chances of a recession in the next year at 50%. That was followed by more signs of a slump. In May, investors began to grow alarmed by an inversion in the yield curve, when investment returns on short-term bonds defy the usual pattern by exceeding those in long-term debt, and often the precursor to recessions. That fueled speculation this summer that a downturn was imminent, or had even already started. To shore up economic growth, the Federal Reserve reversed course and began lowering interest rates. More recently, however, the recession fears seem to be abating. Last week, the government reported that the economy grew 2.1% in the third quarter, faster originally thought, and on par with growth between April and June. So, earlier this year, the U.S. economy was taking a slight hit from declining demand for U.S. exports from Europe and China because of the slowdowns in those countries. But because domestic demand became strong, eventually export demand is going to go as low as it can go, and if the consumers continue to remain robust, then U.S. domestic consumption is continuing to increase, and eventually U.S. export production is going to have to bottom out, and then the U.S. economy will continue to grow at a steady pace at the same rate U.S. domestic consumption is growing. So if the weakness is only in exports, eventually the export sector has to bottom out, and the U.S. economy will pick up growing as domestic consumption grows, and exports can no longer fall further, so they can no longer offset domestic consumption, and total growth continues at the same pace as domestic consumption. And I think that is what's happened. When exports took a hit, the U.S. economy slowed, but now that they've gotten as low as they can grow, the U.S. consumers and domestic production is increasing and powering the U.S. economy, and now, as domestic consumption grows, its contribution to the economy will increase, and growth for that sector will be a higher proportion of the U.S. economy total, and so the U.S. economy growth rate will increase to the rate of domestic consumption, which has remained higher. And so the U.S. economic growth rate will recover faster originally thought, and on par with growth between April and June. Although the latest forecast suggests growth could fall below 2% in the final 3 months of the year, holiday spending appears to be holding up. Yeah, we had like record holiday sales a few weeks ago, so that's to be expected since median incomes have increased 6% above their pre-recession peak since they returned to their pre-recession peak in 2017 over the last 3 years. And another sign of labor market strength, the percentage of Americans in the workforce has risen this year to 63.3%. Although this remains shy of the 66% labor participation rate recorded just before the recession, it tops the figures in the early 50s. Well, that's partly because the declining share of the population is over the age of 65, and so various people are being into retirement and not working. So the labor force participation rate among 25 to 55-year-olds, people in their prime working age, is almost back to pre-recession levels. In fact, let me just bring up the graph right now. See, among 25 to 54-year-olds, just before the recession it was 83%. It fell to a low of, just above 80%. And now it's back up to 82.8%. So it's only like 0.4 points below its pre-recession level. So we've mostly returned to that level. So once you adjust for the fact that a higher portion of the U.S. population is elderly and retired, the labor force participation rate among working age people is almost back to where it was before the recession. Although this remains shy of the 66% labor participation rate recorded just before the Great Recession, it tops the figure in the early 50s. In October 1953, when the unemployment rate was at 3.1%, roughly 59% of Americans participated in the workforce. From Goldman's perspective, the economy is on solid ground, with Jesus putting the odds of recession in 2020 at 20%. We expect the drag from the trade war to fade gradually, he said in a recent report, adding that he thinks China and the US will sign a preliminary trade deal by the year end. That remains to be seen, who knows. Driven by both the better trade news and easier monetary policy, these factors point to modest growth acceleration next year. Yes, the Fed cut rates to adjust for the weaker demand from Europe and China, and so that's been helping counter the bad effects and putting the economy back on stronger footing. Well, that appears to be it for the article. If you like this video, please subscribe to my channel, hit the notification bell, like the video, and share your thoughts in the comments, and share this video with anyone you think might be interested.